Stock market to supposedly crash worse than 1929, and an alternate forecast for the S&P 500 to drop 22%. Today, I read an article on Yahoo Finance put out by Business Insider and written by Theron Mohammed titled, "Black Swan Investor Sees the S&P 500 Jumping Another 12%, Followed by the Worst Crash Since 1929. The author of this article referenced Mark Spitznagel, who is the founder and chief of Universa Investments. According to the author, he expects the S&P 500 to climb another 12% and breach 6,000 points for the first time, and then suffer its worst crash since the Great Depression. I'm going to stop here for a moment. Mark Spitznagel is a well-known bear. Please keep in mind, he also runs a hedge fund that could profit from a downturn. He specializes in convex tail hedging and investing. For example, back on April 8, 2020, I read an article on Yahoo Finance written by Julia LaRoche titled, "Black Swan Fund is up 4,144% this year. Warns we are trapped in the mother of all global financial bubbles." In this old article, the author discussed how Universa Investments posted a year-to-date return of more than 4,000% in March of 2020. I mention all of this because I want you to consider the possibility that some well-known bears in the news may have motives beyond just sharing their thesis about a possible stock market crash. Note I said this is a possibility for some well-known bears, and not specifically this guy. I'll ask you a question. Could this be a strategy to attract new clients to a hedge fund? I'm simply asking you the question, and you can share your thoughts in the comment section below. Getting back to the article that I referenced today, Mark Spitznagel said, and I'll quote, "I've been saying this for a year and a half because people got 2022 so incredibly wrong. We're not in the 1970s. The Fed recklessly popped the greatest credit bubble in human history, and now as people realize that the Fed needs to about face, they're going to get increasingly juked the other way in a face-ripping rally. At the point of euphoria, which is coming, the high will be in and the market will crash worse than the global financial crisis." Here are my thoughts. This is one man's prediction. Could it happen? Sure. Anything could happen. With that said, I am skeptical when people cite specific percentages or index levels. For example, why does he think the market will climb specifically 12% from where it is today? Why does he think it will crash after hitting 6,000 points? I'm just posing some questions for you to think about. With that said, I'll share some additional thoughts that I have. Some past crashes have happened as he has described. In 1929, the market had a lot of euphoria before the crash. The same happened during the dot-com bubble. The stock rallies prior to the bubble popping were epic. They defied all logic. And just when people thought some stocks couldn't go any higher, they did. Then it was all over. If you believe Wikipedia, between 1995 and its peak in March of 2000, investments in the NASDAQ rose by 800%. Only to fall to 78% from its peak by October 2002. There is one thing I want to mention about that crash. Some companies got wiped out completely. It's not like some investors could just keep holding on to specific stocks and wait for them to come back. Some were wiped out. Let's hope that doesn't happen again. I hate to see anyone have to live through that. I know many people who were singing the blues back then. While some were struggling financially after the bubble popped, others were scooping up bargains. For example, imagine if you could have bought Amazon for less than $10 per share back then. Or imagine if you could have bought Priceline, which is now called Booking Holdings, for less than $10 per share. If we ever do see another sizable correction or crash, are you well positioned to capitalize on opportunities? If you are, tell me about it in the comment section below. I read another bearish prediction today. This story was on Yahoo Finance, put out by Benzinga, and written by Piero Cingari, titled, "JP Morgan's top strategist sticks to bearish S&P 500 forecast, warns of 2008-like crash. Equities continue to price in little downside risk." The author of this article referenced Marko Kolanovic, who is JP Morgan's chief market strategist and co-head of global research. He said, and I'll quote, we still see a high 50% probability of the macro picture deviating from the soft landing thesis, either because there is a near-term break in the U.S. economy or because persistent inflation induces the Fed and other major central banks to keep rates high for a prolonged period of time, or to raise them further, thus raising fears of an eventual hard landing in 2025 or 2026. Here are my thoughts. This story was released yesterday, and the Fed was in the news today. Apparently, we may see one rate cut this year. Keep in mind, that may not come to fruition. Months ago, people were all excited about the possibility of multiple rate cuts this year. What will actually happen? It's really hard to say, in my opinion, especially since we are in an election year, even though the Fed is supposed to be independent. Getting back to the article, the author said analysts at JP Morgan forecast the S&P 500 to end the year at 4,200 points, implying a 22% drop from current levels. I always include links to the articles that I discuss in the description below. You can read this for yourself if you'd like. If this happens, some will use this as an opportunity to load up on more stocks. Over-leveraged investors with margin may be in for some trouble if this prediction comes to fruition. What's interesting is the author of this article shared other episodes of more than a 20% drop in the S&P 500 in a half-year time frame in the post-war period, which included a 23.5% drop in 1962, a 21% drop in 1970, a 20.3% drop in 1974, and a 20.6% drop in 2022. Here are my thoughts. Think back to what happened to the stock market after Donald Trump was elected in the past. There was an overnight crash after he was elected. I vividly remember Carl Icahn loading up on $1 billion worth of stocks because he believed that Donald Trump's policies would boost the U.S. economy. Well, he was right. I'm not saying this could happen again. I'm just reflecting on history in response to JP Morgan's forecast regarding the S&P 500 later this year. What do you think about all of this? Share your thoughts in the comment section below. Please keep in mind that everything in this video is for entertainment purposes only, and nothing in this video is financial advice or advice of any kind. If you need advice, seek advice from a qualified professional in good standing who puts your interests first and foremost. If you enjoyed this video, consider subscribing to the channel. Please also consider sharing this video with your friends. I want to extend a special thanks to everyone who has subscribed to this channel. I want to also thank all of my channel members. If you would like to become a channel member, there is a link in the description beneath this video. You can read more about the different membership levels. Please also check out some of the great books that I suggest you consider reading in the description below. I've included Amazon affiliate links to these books. As an Amazon associate, I earn from qualifying purchases. Stay healthy and wealthy. I'll see everyone in the next video.